All right. We are live. Actually, I think that's the monitor. Yeah, that monitor seems get that out of the frame. Very detail oriented. Very detail oriented. Okay. So, this is going to be a week ahead trade plan stream. We're going to focus primarily on using the indicators that I've built. So that's Wayne's Pivots Pro, range probabilities, timing dots, the probability, pivot points, and where it applies in FX markets, the FX yield spread curve indicator. To look at just interpreting the indicators, what could happen going into the end of February here. Now, we do have extra information that I'll be talking about when it comes down to available research. Everybody knows I do good geopolitical research, trying to keep track of elections, try to keep track of stuff going on with Iran, stuff going on with Russia and Ukraine, stuff going on with Israel and Gaza. Try and stay on top in this community, this particular trading group, on as many geopolitical events as we can. That's reasonable. So if anyone would like to help in doing that research, all the research stuff is free. It's not part of a paid trading group or anything. It's just a Discord forum. And I even made a post about it in the general chat. So if you need to, excuse me, if you need to get into the Discord to check out these research threads of some of the things we might need to bring up to help assess the likelihood of different scenarios going into the end of month on different assets, then hop into the Discord. You'll have to go through a WAP to do that. And once you're in the Discord, you'll see in the general chat a couple of highlighted threads that I recently posted about. So Russia-Ukraine war, U.S. midterm elections, United Kingdom local elections. Those are coming up in May. We have an Iran thread that we're closely watching because of all the recent developments. And then a Supreme Court tariff ruling thread, of course. I've done quite a lot of shorts, and last stream was exclusively focused on that. And now I was right. As we get closer and closer to February 23rd, the first few decision days, people now start to talk way, way, way more about it. There was a bit of analysis and outlook from JP Morgan that someone summarized on X about, and I posted that in the research thread for anyone who wants to follow that to see. So with that all said and done, let's now hop to the charts. So this indicator here is Wayne's Pivots Pro. And just as a preeminent announcement, I'm working on a PineScript library called Rolling Window. And it's about, with all the documentation included, it's about 5,500 lines. So it's taken quite a while to get going. It's my next PineScript library to release for PineScript programmers. And after that, I then will start working on indicator upgrades because I use rolling windows in pretty much every single one of my indicators. So instead of rewriting a rolling window algorithm for every single one of my indicators, I can just refer to the library that's already set up and has all the error corrections and everything's just set to work. So that's nice to know that's coming. And that will also be a free library, a public library for anyone to use who wants to get into PineScript programming. If you are interested in learning more about the technical PineScript stuff, I know a lot of people are using AI to program. A lot of people have been actually very impressed. I've been very impressed actually recently over the last few days with the recent barrage of LuxAlgo releases. I don't know if you guys have seen that, but LuxAlgo has their own internal indicator development AI for PineScript, and it's been creating some really beautiful charts, some really beautiful indicators, and I'd say pretty useful ones at that too. But for some of the really, really, really good stuff, you're gonna have someone hand make it. So I am a proponent of AI and using AI to get good work done, especially templating work and boilerplate work, or helping through particularly common problems where you might have knowledge gaps, and then using AI to learn for yourself to improve those knowledge gaps. So it can be a force multiplier. It's just a matter of if you think AI is going to one-shot PineScript, unless you're the LuxAlgo guys who have their own custom AI for PineScript, you know, they could probably build some more complicated stuff with that AI and do really, really well. However, most people, that's an internal tool. They may or may not make it publicly accessible. And as someone who vendors indicators, you always have to be concerned about, well, if someone has this really fantastic AI that can produce any indicator that they want, why even sell indicators? Well, the truth is that AI doesn't have everything in its training data, and some things require you to actually go in and hand make things. The AIs aren't going to know literally everything. And sometimes just having a really simple twist on something is enough to get AIs to not perform remotely as well as humans. There's been a few really viral shorts for this guy had one viral short where he brought up a cup, an upside down cup, and he put it in front of I believe Gemini using an iPhone, and he put the cup in front of the camera so that then the AI could infer from the camera. And he went ahead and asked, hey, I have this cup. It's got a hole in the bottom and it's closed on the top. How can I drink from this? And the AI just thought, oh, this is a gag gift. There's no such thing as a cup with a hole on the bottom that's sealed on the top. That's a gag item. And all you have to do is rotate the cup, and that's how then you can put water in it and drink from it. So there's a meme, another meme, about how smart people can rotate objects in their brain. You know, they imagine an apple, and some people can imagine this really crisp, detailed red apple and imagine it rotating in their brain at different axes from different angles, right? And some people can't relate with that. I don't necessarily know what to say. They just can't relate with it. They don't necessarily think that way. Well, AI is more like the people who can't relate to that mode of thinking. Now, maybe if some AI at some point has enough data to learn that, and there are some AI benchmarks explicitly to check that kind of rotation intelligence. But this is just all to say that there is by no means like a fear for me as an indicator vendor to say, oh, just because there's now this really awesome AI that LuxAlgo has that I need to be concerned. You know, maybe there needs to be rules in place for people who, use AI just to duplicate another person's work. But the truth is, TradingView already has house rules in their terms of service explicitly about just duplicating someone's work to duplicate it. Now, there's kind of a caveat for open source indicators, but you know, I'm absolutely I feel very secure in my ability to produce really, really, really premium, top-notch, handmade indicators that excel at providing the features in an efficient, performant, and feature-rich way to people who use my stuff. So if I ever use AI to do stuff, it's going to be boilerplate, because AI is really, really good at like, hey, I'm going to give you a template. Here's the template of what I'm currently working with. Go ahead and duplicate this for these other scenarios that are kind of benign. And so instead of me manually copying, pasting, and then making all those little individual edits for each, let's say, unique function or unique method, I can work on the more critical issues instead of those more benign ones. So that's more or less my approach. Hello. Nice to see you. I'm doing well. I see you in the chat. So that's kind of the breakdown, at least on how I'm interpreting these things, because it's in my world of TradingView indicators. That looks algo AI, because I went on X and started checking out what everyone was saying about it. Those indicators are going to do really, really well. Doesn't matter that they were made by AI. And also, I really do enjoy reading that code. That code is extremely clean. They were right when they said on X, I forget who, either someone at LuxAlgo or the official LuxAlgo account said, this is written better than like 90% of indicators. And I wholeheartedly agree, as someone who frequently gets a lot of compliments on, again, their more recent work for my count library and some of my other things. Speaking of making code look really good, I had a series for the probability cones indicator that's open source. And I looked through that code. I'm like, oh, this needs an upgrade. And I had a series where I was going through and updating all that code. Well, I have to see if I can bring that series back now, because I want to make progress, public progress, on programming something, give something for people who are more interested in the PineScript aspects of the things that I do. Because as much as I do a lot of geopolitical analysis and I do a lot of trading analysis, I do good PineScript, and I would like to involve anyone who wants to learn how to do better PineScript on their own, how to. Because again, if you make an indicator with AI and it's not quite there, not quite satisfactory, or you want one specific edit, you should kind of learn. You should learn how to do the little edits that you need. Tokens cost money, and you have to kind of weigh what's the opportunity cost between me learning a little bit of PineScript to effectively do what I need to do, and the cost of the tokens that it will require in order to implement XYZ. So you have to look at the balance between those things, your time investment in learning the skill of how to do PineScript programming, and then going through the process of actually implementing all that stuff that you want to implement on your own, at your own pace. And I'm available for help. So if it's a little thing, I don't mind just telling you, hey, here's the little thing. But if you're talking about like, hey, here's like a whole indicator, well, then I have time you can buy from me. You can like schedule a little bit of time for me over on the WAP specifically on helping with PineScript programming. Either having me do it for you or showing you, hey, here's how it's done. Because I know all these different libraries that are out there. There's a really cool library. There's a colors library that TradingView has. I want to use that in the probability cones update when I get to it, because it's a really nice way of actually implementing gradients if you can do that. So I think it would look really cool to try implementing that library, that colors library. I really like making my indicators look pretty, because you can see like, oh, I have these green boxes and I have these emojis here and everything's properly labeled with prices and pivot point labels. It's all nice. So I know this is a trade plan stream, but this is kind of the preamble. So we've been going for about 15 minutes. Let's go into the clippable stuff now. The stuff that's going to make it into the stuff that's going to make it into the Opus and the Descript editor highlights. Those things do save a lot of time. They do save a lot of time. So right off the bat, this is Bitcoin. I did have a trade earlier at the beginning of the month with Bitcoin. You can see roughly around that S2 level. And I took a long. As soon as things bounced up and started coming back down, I hopped out, and things have been going sideways since. So nothing terribly new, frankly, on the crypto side. I had a thesis about crypto miners getting essentially bankrupted by other miners who were trying to keep the Bitcoin price suppressed. So then people who took out all this debt in order to go into Bitcoin mining would have a much harder time paying back those debts, because in their business plan or whatever, they assume Bitcoin price stays above, $80,000 or something. So when Bitcoin goes below those prices, it kind of puts their business in jeopardy. And for larger miners who have, you could say, more robust financials, they want the price in these scenarios to actually stay suppressed. This is just the thesis, to stay suppressed for as long as possible in order to bankrupt, in order to get those businesses out of business, because then you have less competition. Just flat out, they'll sell off their energy generators, they'll sell off their mining rigs, and you can scoop it up if it's decent. There's also one more thing on that thesis that ties in. Some of the larger miners who are really well capitalized and have really good relationships with ASIC manufacturers and chip manufacturers, there's strong competition for chip capacity at different manufacturing plants, because AI companies are coming in and buying a lot of the time, the manufacturing time and manufacturing capacity. So what you end up with is this huge competition between all these other companies trying to get chips for their own use cases versus the AI companies. So these ASIC and Bitcoin crypto mining companies that are doing proof of work, right? We're not necessarily talking proof of stake people, but everyone who's doing proof of work needs, in order to stay at the top level of competitiveness as a miner, they need the most powerful hardware. And in order to get that, they need to be in a contract with these manufacturers, these hardware manufacturers. But a lot of this capacity is going to AI, so there's now reduced capacity for these miners. So fewer miners get access to the best possible hardware. What ends up happening is all the smaller miners who aren't super large or have these good connections or have money to slosh around or who can go into debt to acquire this hardware in competition with the AI companies, all the other companies that aren't able to do those things are going to be at a disadvantage potentially for a year or two until capacity comes back online to meet the demand of the rest of the market. In the meantime, these larger companies are going to have the better hardware. Now, this is kind of a tale as old as time for proof of work stuff, because even when ASICs first came out, like the very, very first ant miners and whatnot, there were allegations of these companies going on to the chain and mining with the new hardware for a few weeks to a few months, and then the difficulty would rise up, and then they would sell that hardware to their customers, and then they'd make themselves new hardware that was even stronger, faster, and more efficient for the current difficulty level. I don't know how many people would remember that process, but you know, a lot of people didn't like it. I sure didn't like it when I was mining, but that happens. It's just nowadays there's more strict contracts like, hey, you're not going to be mining with hardware we're paying you to build, right? Because these companies that want the hardware are paying the manufacturing companies to build these ASICs. Unless it's somewhere in the contract that says, hey, you can mine during the most profitable period with the most powerful hardware, mining hardware, for yourself for like a month, and then you can deliver it to us. I don't think that's really a thing anymore. I don't think that's a thing anymore. Yeah, interesting little tidbits around. So again, supposed to be a trading stream, supposed to be looking at end of month stuff. I know, but I'm just having a fun time, kind of shooting the shit. Excuse me. So let's see, we're 22-ish minutes in. But I think those were two pretty good topics. Just kind of leaving down the just talking about what's going on in the world of trading indicators and all this cool kind of historical stuff and this thesis around Bitcoin. It's all very cool stuff. Very, very cool stuff. So there was a trade here. I don't really have a strong expectation on where Bitcoin's going to go. However, given that thesis, I would expect price to be suppressed for a while longer. One of the analysts that I follow closely is James Check from Check on Chain, and that also, in summary, seems to be his expectation as well, that we are in a bear market. This bear market could go on for longer than expected. Bitcoin's kind of a different monster than it was back in history. So you can't one-to-one look at the history of Bitcoin or even of on-chain analytics and extrapolate forward probably as accurately as you used to be able to. So it's really important to assess the current state of things. I would recommend reading James Check's analysis if you want more detail on his approach and his analysis. Okay, let's go ahead and check out a few other assets. We can go to the watch list and check out a few things. Hopefully this is big enough for everyone who's on phones and laptops. I think I adjusted the magnification well. Let's see here. What's this? This is plus 200%. This is plus 200%. Oh my god. Yeah, the screen looks massive on my end. Okay, let's start with the equities. Let's start with ES. 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 If you guys know vidIQ, that whole little short ES. ES. Okay. It seems like we'll get more sideways, probably another bounce. I mean, again, it depends on the tariff outcome. If the tariffs are ruled lawful, then I would expect this to continue to do status quo as well. It would just continue going sideways. It'd continue going just fine. If the tariffs, the U.S. Supreme Court overruled the IEEPA tariffs that Trump has placed primarily on exports to the United States from India and China mostly. Most of the big brunt of those tariffs are for the rationale is the president doesn't like the fentanyl being sent to the United States or frankly to Mexico or to Canada and then across the border. So those were penalty tariffs for that. And then on India for accepting Russian oil. And the reason that's a no-no is for the Russian-Ukraine war. It's incentivizing and funding the war effort. Now, there was something recent that happened where India agreed to stop taking the oil and the tariffs were removed as far as I know. But there are still quite sizable tariffs on India. I need to see, frankly, an updated chart of the current status of the IEPA tariffs. But if those tariffs are overruled and removed, and we could very easily see that, again, this is all starting pretty much next week. So Monday through Wednesday, the 23rd, 24th, and 25th of next week are argument days. And those argument days are when decisions can get passed, usually between 9:40 to 10 a.m. Eastern Time. And then the process repeats for the following first week of March, Monday through Wednesday, 9:40 to 10 a.m. Eastern. Then there's a 2-week recess in the middle of March, where the next set of argument days are at the end of March, where there's another 2-week period, Monday through Wednesday, 9:40, 10 a.m. Eastern, where we can get argument days. Now, from the prediction markets that I saw, the odds of the decision from the U.S. Supreme Court coming through, just any decision, whether it's declaring that the tariffs are lawful or not, is something like 80% that the decision comes before the end of March. So all those dates I just talked about, 80% chance it happens sometime in what I just described before the end of March. So that literally could be the last 2 weeks of March, or it could be in the next 2 weeks in the Monday through Wednesday window, which are the windows that are more likely. I know some people said, oh, they could announce today on Friday. I'm pretty sure that that didn't happen because obviously they weren't checking the comments on the prediction markets, going through the calendar, right? There are some really, really well-informed prediction market bettors who have a specialty in Supreme Court decisions. So it's worth following those individuals and what their analysis is for Supreme Court expectations than, well, frankly, the regular Joe Schmo. Which is why I defer to them and why I actively seek that information. Okay. But it's just a matter of knowing to look for that information. I think I got like eye sand or something in the corner of my eye. Anyways. Okay. Yeah, those are the dates we have to watch out for. So this would be Monday. If I actually go to Euro Dollar real quick, I'm pretty sure I have a drawing. Yeah. U.S. Supreme Court. And we'll go over this as well. And then ES. There we go. So recess ends here. And then let's see here. March 2nd, 3rd, and 4th are the days to watch out for if the decision doesn't come in the 23rd, 24th, 25th. Okay. So would this go down if the tariffs had to be refunded? I don't think so. There might be some companies that started to do more capital expenditure because they assume that the tariffs are going to protect their company. Those companies would be vulnerable to a decision that the Supreme Court makes saying that these IEPA tariffs and the way that they were imposed was unlawful. So the company's doing big capex on the assumption that these tariffs stay on would be negatively impacted. I'm not sure that will have a super significant impact on the ES unless someone can argue and show me a FANG company or really a set of companies in the S&P that are directly exposed to that because they were doing those investments. And then it's the same thing with the NQ. However, NQ is probably a bit more robust to that because there's more tech and more services in the NQ. But I'd just say things probably continue going fairly steady. It would be quite interesting if we kept going lower, in my opinion. Yeah. Oh, that's kind of fun. There's some timing dot lows right here. These little red dots. If I go ahead and hide these little boxes. So given the high for the month, historically, 2 times before, we've had 2 lows right around here. And this is where we currently have the low for the month. So this gives me, and I mean, I don't think we're going this far down unless there's, I mean, I won't even say it. It's so ridiculous. But the thought I had is like, you're not actually gonna probably realize lows this low unless, let's say there was the invasion in Iran that escalated, and then sleeper cells of the Iranian regime in the United States started doing extremist things. Let's put it that way. Let's keep it PG. But in that situation, this would actually be an underestimate. You would probably expect prices to go much lower in that scenario. So I think, excusing that scenario, this would be a reasonable low for the NQ. Okay. Now let's go to the euro dollar. Because I did get some messages saying, Joe, you had this big green arrow here at the beginning of the month, then you need to trade better. I'm like, what? I took this trade because I thought your dollar would continue to appreciate, and it did not. Okay. That's how it goes. These last month were really great winners, so I'm very happy about those. That one was a loser. This one was a winner. That one was a loser. That one was a loser. Okay. Fair is fair. Quite a bit of choppiness, choppy trading here during the middle of February. So my expectation was not met, but at least you can see, okay, here's a time-stamped expectation of what I was thinking was going to happen when. It's not a matter of, oh, you have to go back and watch some obscure old stream to understand the rationale or understand the expectation that I had set at different points in time for different trades. It's just there on the chart with the drawings. So I like that kind of transparency. However, I also kind of work with me here. I was bullish, primarily euro dollar, as my, again, primary expectation. And I had my reasons for that. I posted that in my trade thread in the trading group. But at the same time, dollar yen moved extremely. The yen got a lot stronger, a lot faster after the election of Takaishi. And this is the election of Takaishi here. I was actually expecting dollar to get stronger against the yen because of the expected loose fiscal and monetary, well, mostly loose fiscal policy. However, the yen got stronger and stronger and stronger going into the banking holiday, which is when I actually expected yen to get weaker. So I was kind of expecting dollar yen to get strong and then weak here. So I was expecting to get some kind of short here. Instead, dollar yen got weaker, continued to get weaker. And I have a trade here, long. And I don't get great leverage in the United States on yen pairs. But I thought it was such a good trade. I'm like, okay, I need to, if the euro dollar trade doesn't work out, if yields start moving against me in such a significant way that I need to pivot, this isn't the worst place in the world to, frankly, just put on some protection. So yeah, I took that euro dollar long trade. It didn't meet my expectation. But at the same time, I had this dollar yen trade. And currently, that's 217 pips. That's pretty good. And, I get that it's not, I get about half the leverage on euro dollar that I do on dollar yen. But the thing moved pretty much twice as much as euro dollar would. So, and also I cut my losses by using the stops properly. So net, I'm up by doing a proper hedge here. So I really don't see what the problem is. It was a smart hedge. So why take this particular trade? Mostly because of this indicator here, the range probabilities. We were trading really high up. I was like, oh, if we go any higher, we're starting to trade into tail risk scenarios here. And maybe after the Japanese banking holiday, I can snag a short up here and take it down to a more reasonable close into the end of the month. That didn't happen. And after this move, I'm like, oh, this is still a pretty high probability spot to find a low. It's kind of at the edge of a peak in the distribution of where lows occur for the month. So we can go to a smaller time frame, and we can use replay mode with this indicator to see exactly it is what I saw. You can see I was like, okay, I'm not trading this. This is all tail risk based off weekly distributions. Very explicitly, right? Like, this is the tail of the distribution. Not shorting into this, because Lord knows this could whipsaw back. Yen can be quite volatile, which is one of the reasons why the leverage is a lot lower. So, still, I went long way down here because I was expecting, based off the monthly ranges, this to work out. Maybe to get a little bit more specific, I can go to my trade thread and check for dollar yen. Yeah, pretty much. It's simply put, this was a very far and fast move, and I wanted to hedge the euro trade. That's literally it. It's like, hey, if the euro trade doesn't work out, this is at a decent spot. It really wasn't any more complicated than that. Oh, and look here. See, this is my charts, these vertical lines. We can hide this for now so we have a clean chart. Look at that. Takaishi meets Trump. This is the date, the current planned date for Takaishi, the new Prime Minister of Japan, who has a huge supermajority. She has enough people to change the constitution of Japan. And that is her plan right now. She's going to remilitarize Japan. And that will definitely put a lot of pressure on China. So, Takaishi is going to meet Trump in the middle of March. So it's good to put that on your chart, so as price goes forward, as time continues on, you don't lose track of important calendar events. Let's see, what else is there? Because at most, that's just been a trade review. How about this? Let's look at the probability pivots. Oh. Oh, man. I built this indicator. Originally, I built the very first version of this indicator like 6 years ago. I was sitting in a statistics class, and I'm like, if I just did these things with pivot points and seasonal data, I could probably have a really cool indicator. And so I created this other metric called the probability weighted pivot, which is this orange dotted line that takes all of the pivot point levels and the probabilities assigned to each pivot point level as weights. And it generates this probability weighted pivot. So these green boxes with the percentages say, okay, for the month of February, between which two pivot points does the low for the month occur historically? Well, very, very, very frequently, assuming things are behaving seasonally, because outside of seasonal moves, if you're not expecting things to behave seasonally, seasonal data does not meet proper assumptions for setting good expectations, good future expectations. But it also, man, that is when you see something like this, 43% of the time in the month of February, dollar yen for the month finds the low somewhere between S1 and S0.5. And of course, there's other pivot point, midpoint label styles. I believe this is... it's got to be M3. Let's see here. If I haven't forgot my midpoint styles. So M Legacy? No, it's M2. Ah, man. M3 is up here. Yeah, it goes from 0 to 5, bottom up. I did find that kind of unintuitive when I first started learning, and then I found a lot of people just do this 0.5 system, so I made that the default. It's a lot easier to interpret initially. Okay, let me make sure I'm in the chat for the event stage and all that. Good, good, good. Ah, man. That's great. So I would assume that the low for the month is in. I'd assume the low for the month is in. Yeah. And then next month, it's not so clustered. It actually looks quite symmetric below the distribution of seasonal lows. So it's probably range bound next month. But let's focus on end of month, which means we need to look, because we're now in Friday, we need to look at the week ahead. So to do that, we go to a 12-hour chart, and that should bring up automatically next week's odds. So we have a bimodal setup here. It says 21% of the time, the low for the week seasonally, relative to pivots, comes in between central pivot and S0.5. And then down here, we have another cluster. This, in my opinion, would indicate a lot higher volatility because you have between S1 and S2, that's quite a wide range. And this is roughly 40%. It's a little under 40%. It's probably closer to like 39% of lows next week occur between S1 and S2. Probability weighted pivot is around 153.2. This price will update until the final closing value for the week. So we put the pivots here with the probabilities here to assist with trade planning for the week ahead. Let's go ahead and look at the high odds. Oh, that's a lot more symmetric. So while for the low odds, we had more bimodal setup, which is, okay, maybe you get your low here, and maybe you get your low in this wide range down here. Over here, it's a lot more centered. It looks more like the monthly odds we were just looking at on the low end. This is close to saying, hey, 40% of the time for this week seasonally, the top for next week comes in between R0.5 and R1. And the probability weighted pivot seems like it's getting a bit skewed by these two outliers here. But it's weighted, so it's going to be massively still pulled by this. So also this odd is quite big. It seems it's not a totally symmetric thing, so I wouldn't be surprised if I could do this real quick, delete those. If I see something along the lines of this up to R1, let's go ahead and timestamp to be responsible. And let's see here, what's the current time? Oh, 4:49. Wow. I have to reduce the text size. Yeah, that arrow is really struggling to fit that text. Okay, there we go. And then down probably here. Why don't we bring up those low odds one more time? I believe it's a little higher, right? Yeah. So I wouldn't assume such a volatile move, but it can easily be planned for. This would be, frankly, what I would call the nominal expectation. The nominal expectation is simply the setup, looking just at the indicators, just with the data that it provides, not taking into account geopolitics, not taking into account any other external factors, economic events and whatnot, just looking at the odds, the nominal odds, the nominal trade plan using the indicator is to go set these targets where the odds are greatest. Now, when you do start overlapping geopolitical interpretations and economic events and expectations for other things, you can skew these odds and say, well, and this is one of the reasons why I initially made this expectation, I don't think it's going to be so crazy. That's all. Now, could I be wrong? Sure. But the cost of being wrong in this particular scenario is actually not that great. More specifically, let me make this red, make this red. I'm pretty sure actually I have a template for red. Yeah. There's the template. And we can, real quick, copy that. Paste. There we go. Okay. So if the top, which does have a bit of higher certainty seasonally, does come in around R1, then on a sell, going down to this more conservative target, fair game, all good. But if you're already in a short position, then if it continues going down, that's gravy. It's extra. So the question is, do you hop out here or hop out here? Well, one thing that we can do to try and help assess those risks is actually to look at the odds of where we likely end the week, closing odds. Okay, so let's go ahead, switch those to close. So this is saying for next week, looking at all the prior times we traded this particular week seasonally, where between which two pivot points did the close end between. And so we're getting distribution here. Looks quite symmetric. Seems to be on the more positive side. And I'm making that assessment based off the probability weighted pivot, which is above the central pivot. If we had a more bearish probability weighted pivot, this line would be below the central pivot. So just looking at the historical seasonal data from this indicator, I wouldn't set this as strong of an expectation. However, if we did go down this far, I would prefer to be a buyer. The reason why is, if let's assume this path occurs, going up and then down to S1.5 past S1. Well, what we're currently looking at are the seasonal closing odds. And this is saying, if we just do a little bit of math, you have 4, 4, 4, 4, 4. So 4 times 5 is 20. Add up these extra percentages, call it 21.5%. So 21% roughly of closes for next week seasonally on dollar yen occur below the S1 pivot point. If you take the complement you're saying 79% of the time historically the close occurs above the S1 pivot. So I would assume if we move down this far, some kind of reversion to a higher probability close. And then we can set that to blue. And that would be my net expectation for that move. Otherwise, it'd be a more sideways looking thing here. And if you're paying to hold, if you're paying the swap fees in FX to hold day to day, and things aren't moving a whole lot, you just want to get out in this scenario. You don't want to be holding all the way to close like this. It's not worth time for the money in a decent number of circumstances. But in this scenario, there's another directional trade to set up. And that would make paying swap, if you have to pay swap, worth it. So that would be the approach to trading with this indicator on dollar yen for next week. And I hope that made sense. I hope that was clear and relatively concise. And we're now about an hour in. So I think it'd be time to either end the stream or chat for a bit, or go over any assets from anyone watching. Yeah, because otherwise it'll be time to send all this stuff to the AI Clipper and see what the Clipper gives. Okay. I can cover the other indicators probably in another stream, but I think this was a pretty good breakdown for the probability pivots. And if you want access to this indicator, you have to be in the trading group. That's how you get access to it, and it comes with all the other indicators. So if you need walkthroughs on how to use the indicator and how to interpret the indicator, you get that absolutely in the trade group. So don't feel overwhelmed by, oh, I have all these indicators of all these stats and all these numbers. I have to learn all this stuff. Don't worry. It's usually one session. It can take maybe 1-2 hours, kind of depending on the charts we go over, the indicators, how in-depth things are, what questions you have, how deep the analysis you're doing is in regards to other things you're factoring in beyond the indicators. So that's what the trading group is for. And you get access to these in the trading group. Okay, with that said and done, I'll go ahead and say thank you all for watching, and I will see you guys in a bit.